Good morning, everyone. I am C. Ankit Sharma, and I am your faculty for next few sessions. So, before starting our class, today we have a problem session, and you must all know about that. You have already completed some classes like Chapter 1, Basic Concepts, in which you have discussed the introduction part of income tax, black money concepts, rates of tax, etc. Then Chapter 2, which covers residential status and incidence of tax topic. And then Chapter 3 that covers income, those are exempted from tax, including Section 10AA, which actually covers special economic zone provisions. And then, of course, a huge chapter, a huge and very, very, very important chapter, and that is our salary chapter. So these topics you have already covered in the last classes, which has been conducted by our institute, ICAI plus Board of Studies. So starting the classes and discuss about the topics, the problem, the MCQs, the case scenarios today. Before that, I would like to thank Institute, our ICAI and Board of Study to give me this opportunity to interact with you all and be a small part of your journey, a beautiful journey to becoming a chartered accountant. So, as I told you, I am C. Ankit Sharma and I passed out in 2004 and in teaching from last almost 20 years. Before COVID, I was in offline mode, and now after COVID, our institute gave me opportunity to be a part of your success. So I am on ICI portal, and a small part of your journey is definitely going to be with me. So today we have a class of problem session, and after that, I will be with you for PGBP, for capital gain, and income from other sources. So there are a lot of good morning already has come to me, and let's say good morning to everyone. So Ms. Diksha Agarwal, good morning. Then Shant, good morning. Darshan, good morning. Bhumika, good morning. Sushil, good morning. Kriti, Singh, Rajiv Kumar, everybody has a very, very, very good morning. Suprabhat, Namaskar, Kencho, Vanakkam, whatever it is. Fine. So good morning session has been done. Okay, welcome back to my, Sankaran. Okay, you know me. Okay, yeah, we have met earlier also. So today, before starting the class, problem session, I would like to tell you one thing, that this course that you have joined, the CA course, is a very, very beautiful course. It comes with a lot of respect and responsibility. And you must have already listened from a lot of people that it's a very difficult course. It is difficult, of course. Of course, it is difficult. And that's why it is important. But there is nothing difficult in this world, because a normal person can do a CA course if you have a proper focus and discipline. Then you can definitely clear this course. And it is not that difficult for those who prepare with a planning, who actually want to become a CA. So if you really want to become a CA, you will be a CA. If you don't leave a CA course will not leave you. Remember this. So this is the best thing you are doing in your life. Work hard, and definitely you should thank to our institute, who actually took a lot of pain to provide you these kind of classes, which no other institute in this country is actually providing. And that is free of cost. And what is free for you actually comes with a lot of hard work, with labor, intensive labor, the coordinators, the faculties, the institute, whole team with a lot of money actually, and they are doing this just for your benefit. So please, please, please always thankful to the ICAI and Board of Study. You can see us, we are the face of this faculty classes, but there are whole team, the coordinator, the technician, who's actually making it possible for all of you. So before starting, now, a lot of good morning again came over here. So there is something I want to discuss. We will discuss each MCQ and the case scenario problem today, one by one, each and everything. And I personally feel, if I feel that there is some provision we should discuss before discussing any problem, which you already have been discussed in the last faculties, those actually give you knowledge about those topics. But still, I will try to clear something if I feel that this numerical or problem need again a simple revision or a quick revision of that topic, I will do it. So just relax, enjoy this journey, Forget the load on your brain. Just fall in love with your studies. If you'll feel interest with your study, you will really feel that this course is not that difficult. So just relax. I am there for you. I'll help you in every way. Just relax, trust on me. And but one thing I want from you, that is focus. Be serious about your studies. Focus means when you study, you study. Don't think about anything else. When you party, don't think about the studies. But because we are actually giving a lot of you for you. So for this time, I just need one thing from you, proper focus, whatever I am saying, whatever we are discussing. And I'll solve all your queries. You can send me query. I will answer each and every query, I promise. Okay, I'm not going anywhere. I am here for you. So let's start this. So let me share this first sheet for problems. This is available on your study portal. You can go and check it out there from Institute. And one by one, we will discuss each and every problem. So there's question number 1 from multiple choice question for May and November attempt 2023. We all know that we are discussing assessment year 23-24 questions over here. That is financial year 22 and 23. So first question is related to agricultural income. Fine. So you must have gone through the provision of agricultural income, and there was a provision, that is integration of agricultural income with non-agricultural income. And there are some businesses in which there are certain percentage, and out of that certain percentage, a specific percentage will be treated as your agricultural income and balance will be your non-agricultural income. So first question, what it says, assessment year 23-24, it is wrongly written is 23-34, it's 23-24. Fine, it's a clerical mistake, that's it. Mr. Hari, a resident Indian, earned income of 10 lakh from sale of rubber manufacturing from latex. Okay, so anybody of you can answer me, what is the provision regarding the percentage, regarding the rubber growing and manufacturing business? You must have read it few days before in your income exempted topic. So can you tell me the exact percentage? I just need a percentage. What is the percentage which has been prescribed for this business? What percentage we will take as an agricultural income and what is as a non-agricultural income? Can anybody answer me? I'm waiting for you. Let's see how sincere you are for your studies. Just enjoy the study. This is very interesting. Very, very interesting. During our session, I will also tell you how to create interest in your studies, how to enjoy the studies. And once you are actually able to create interest in your studies, the studies will be really easy for you. A lot of easy. So somebody has answered me, Miss Singh Rajiv Kumar, 65% is agricultural income and 35 is non. Well done, well done. High five from Wi-Fi, Mr. Rajiv Kumar, Miss Singh Rajiv Kumar, sorry. So exactly, correct. The percentage has been prescribed and that is 35% will be treated as non-agricultural and 65% is in agriculture. There are also some other business like roasted coffee business, you must have read that, and tea business also there. They have certain percentage like 60, 40 and 25 and 75. Always remember the lowest percentage is non-agriculture. So if there is 65 and 35% and you forgot an examination, what is agricultural, what is non-agricultural, then 35% will be non-agricultural. In the same way, 60%, 40%. So 40% will be non-agricultural. In same case, 75%, 25%, 25% will be non-agricultural. Okay. So in this question, because the question relates to the rubber and latex provision. So whenever you read a question, after reading that question, you should think about the provision and then implement the provision with the question information. So that is a correct way to solve any question. You have to first of all read the question and then think about the provision you have actually read about it. So for rubber provision, we have read that if there is any income, that will be bifurcated into two parts, 35% and 65%. So the question says that income earned is 10 lakh from sale of rubber manufacturing from latex obtained from rubber plants grown by him in India and 15 lakh from sale of rubber manufactured from latex obtained from rubber plants grown by him in Malaysia. So we have two incomes. One is from agricultural activity in India and one is from agricultural activity outside India, in Malaysia. So always remember, only those income are exempted as agricultural income which is carried out in Indian. So if there is any agricultural income which is earned outside India, that will not going to be exempted as per the definition of agricultural income. So what we will do? The question asks, what would be his business income chargeable to tax in India, assuming he has no other income? So let's solve it. Fine. It's very simple. So we have technically one income, which is 10 lakh rupees, which is from the plants of latex and rubber. So in this case, 35% will be non-agricultural income. Clear? If there any confusion, you can ask me. Okay. So 3.5 lakh will be non-agricultural income, which is going to be taxable, because the question asks income chargeable to tax, we need to tell. So 65%, that is not going to be taxable because that is agricultural income. The second is the income earned in Malaysia, which is outside India, that is not going to be treated as exempt agricultural income in India. That is not technically agricultural income in India. That is non-agricultural again. So that is also going to be taxable. So total taxable income is 18.5 lakh. So what is our correct answer? The option D is our correct answer. Is it as simple as that? So how we need to solve the question? You need to read the question, think about the provision and then implement it. If you do this process, definitely you are going to solve more questions. Fine, easily, very easy. So let's see if somebody is going to need to ask anything about it. So agriculture 60, 40, 65, okay. So I hope it is clear. The correct answer 13.5 lakh. Somebody also give me the answer. Gunapalli Prasanna, well done. And Ms. Bhumika also give the correct answer. Well done. Very well done. I like it. Okay. So next, moving on to the next question. Question number 2. Mrs. Somya has 3 farm buildings. That's a very good question. Very, very good question. In the immediate vicinity of a rural agricultural land. In the previous year, 20 to 23, she earned 3 lakh from letting out her farm building 1 for storage of food grains, 10 lakh from letting out her farm building 2 for storage of dairy products, and 15 lakh from letting out her farm building 3 for residential purpose of Mr. Suman, whose food grain produce is stored in farm number building 1. What is the amount of agricultural income exempt from income tax? So in agricultural provision, you must have read the provision regarding income from farm building. So this question relates to that provision. So we must have first, what should we do? We should recall the provision regarding that provision, which says which income will be treated as income from farm building. So the provision says that should be immediate vicinity. Then it should be used for agricultural purpose. So as per the provision, what we have discussed about the farm building income, now we see out of these 3 property income, which are going to be treated as your agricultural income. The first one says, we can see this is the rural agriculture. Previous year she earned 3 lakh from the letting out her farm building 1 for storage of food grains. So this building is utilizing for the purpose of his agricultural activity. So that's why, because it is utilizing for the purpose of agricultural activity. So this 3 lakh rupees will fulfill the definition of income from farm building, which should be treated as your agricultural income. So this is going to be exempted. First is 3 lakh is going to be exempted as your agricultural income. The second point says that they are earning 10 lakh rupees from farm building 2, which is used for dairy product. Now, dairy product is not an agricultural income. We all know that. Dairy product does not fall in the definition of agricultural income. Clear? So this income is not going to be treated as your agricultural income, because for the purpose of income from farm building to be treated as agricultural income, that should be used for the purpose of agricultural operation. And dairy products are not the part of your agricultural income. So this is not going to be exempted. This is going to be taxable. And what we need to answer about the agricultural income part. Clear? Now the third is over here. This is interesting. It says 15 lakh from letting out her farm building 3 for residential purpose of Mr. Sumant, whose food grain produce is stored in farm building number 1. So building third is used for residential purpose, not for agricultural purpose. So third building is used for residential purpose, not for agricultural purpose. So this is also going to be taxable. If you can check it out, you can see the study material, page number 3.11. Page number 3.11 has the provision regarding this point. And it's very clearly stated that if it is used for residential purpose, etc., that is not going to be treated as your agricultural income. I can share that slide with you. You can also see yourself. Let me show you. This is the provision I have copied from your study material, page number 3.11, point number 3, which says what is the income from farm building means. And it says income from farm building means which is owned and occupied by the receiver of the rent of revenue of any such land, or occupied by the cultivator or the receiver of rent in kind, or any land with respect to which or the produce of which any process discussed above is carried on, would be agricultural income. Okay. Now you see the second para. It is clearly stated. However, the income arising from the use of such farm building for any purpose, including letting for residential purpose or for the purpose of business operation other than agriculture, referred to in point number 1 or 2, would not be agricultural. Clearly, this was a question. I always believe that if you have actually learned the provision correctly, then you can answer any query, because everything is based on the provision. So this provision specifically say that if it is used for residential purpose, that is not going to be exempted. So on the basis of this provision, we can answer our question. Question number 2, which says that only 3 lakh is going to be exempted as your agricultural income. The correct answer is the point number B. I hope it's clear. Anybody has any confusion? Clear? Okay, somebody's answer. If you are connected with me, if you are answering, that means you are sincere for your profession. So it's really feel very good for any faculty. If students interact, if they answer the question, the faculty really feel very good, because you are the technical motivation for us. So if we are not able to see you, but your answer, your queries make us proud, make us feel that you are technically connected and you are sincere for whatever effort we are putting it, or our institute and board of studies is doing. So question number 2 has been solved. Now moving on to question number 3. That's a very interesting question, very easy. What it asks, it says that the Gupta HUF in Maharashtra. So you all know about the Hindu undivided family concept, of course. So it says the Gupta HUF in Maharashtra comprised of Mr. Harish Gupta, very nice, his wife Mrs. Nidhi Gupta, his son Mr. Deepak Gupta, his daughter-in-law Mrs. Deepti Gupta, his daughter Miss Preeti Gupta, and his unmarried brother Mr. Gautam Gupta. And it asks which of the members of the HUF are eligible for co-partnership right? So in the provision of HUF, you must read that there is a co-partner concept, there is a concept of members. So the question asks, out of these all members, who are technically co-partner or who having the co-partner right? So very interesting provision. I can make you understand this provision in just a single line. So those members who reside in a house, who reside in a joint family, only those can be considered as co-partner who have technically born in that family, who's technically take a birth in that family, natural birth, who's technically born in that family. So if you need to find out who are co-partner, just find it out who technically born in that family. So one by one we will see in Gupta HUF. If we will see, we can see that in Gupta HUF, Mr. Harsh Gupta, of course, born in the family. So he is a co-partner, right? His wife. So wife does not technically take a birth in our family. They form part of our HUF after the marriage. So his wife cannot be the part of co-partner. Clear? And his son, Mr. Deepak Gupta, he has taken birth in the family. So he's also part of co-partner. Daughter-in-law, of course, cannot be part of our co-partner because they technically do not have taken birth in our family. So Mrs. Deepthi Gupta cannot be the part of our HUF co-partner, but daughter is of course co-partner in our family because she takes birth in our family. And his unmarried brother also, Mr. Gautam Gupta. He is also taken birth in our family. So technically these four are the part of our co-partner in our joint Hindu family. So which option is correct? Option number B say only Mr. Harsh Gupta, Gautam Gupta, Deepak Gupta and Preeti Gupta. Because they have taken birth in our family, so they have the eligible for co-partnery right. Right? I hope it's clear. Let's see how many of you understand the correct provision. Okay. Look, answer already written in this sheet. Fine. So just try to understand whatever I am trying to convey you about the provision. If that is clear, my work is done. So well done. If you are interacting with me, you are giving the correct answer. Very, very well done, everyone. Diksha, Varsha, Rashmi, Sonali, Shubham, etc., etc. Well done, well done, well done. Now moving on to question number 4. And question number 4, that is for residential provision, residential status provision. And it's a very, very, very important provision for your chapter number 2. And I personally feel in every attempt, there is some question, numerical kind of question, which is related to residential status, always has been framed in the examination. So it's a very important topic for your professional life, for your practical life, of course, also that you should know that you are a resident or not. So let's discuss question number 4. Mr. Square an Indian citizen. Before discussing this provision, I personally feel that you have already come through the provision, you have must solve the question regarding the residential status. But let me take a quick revision with the help of a chart which I have made for the students regarding the provision. So it will help you to understand the provision more clearly. And here is the diagram. I hope you all can see that. Okay. So this is the residential status provision short diagram, which I have been prepared for you so that we can revise provision quickly. Because there are a lot of provisions regarding residential status. So I need to discuss a quick revision regarding that, then we can take up the question. Excuse me. Okay. So the basic provision for individual we are only discussing. We are not discussing about the HUF, not the company provision, etc. We are just taking up the individual provision, which says either you will be a non-resident or you will be a resident. We all know that. Fine. And now the provision says, in case of resident, either you will be a normal resident in a section 6.1 or you can be a deemed resident in a section 6.1a. For normal, becoming a normal resident, there is two basic conditions. That is, either you are in India for more than or equal to 182 days in previous year 22-23. So you will be a resident. Or you are in India for more than equal to 60 days in previous year and more than equal to 365 days in 4 preceding previous year in India. Clear? This is the provision. We all know that. And there are some special individual cases also. So if you are an individual who is a citizen of India and going outside India for employment purpose or a crew member of an Indian ship, then you will be only called a resident if you fulfill condition number 1, that is more than equal to 182 days in India. Special condition 2 is applicable for individual, those are citizen of India and person of Indian origin. Either you are a citizen or POIU. And those comes to visit India. So they will be only resident if they fulfill condition number 1, that is 182 days in India. Now a third case that is very important for your examination. If you are individual plus citizen or person of Indian origin and comes to India for visit and having a total income exceeding 15 lakh from Indian resources, then you will be called a resident if you fulfill condition number 1, that is more than or equal to 182 days, or there is a new condition also. If you are in India for more than equal to 120 days in previous year and more than equal to 365 days in 4 preceding previous year. So this third case is very important because it's a new amendment which has been inserted like 2 years before. Before that only there were 2 special cases, now there are 3 special cases. So if you are individual, either citizen or POIU and comes to visit India, and you have income from India more than 15 lakh rupees, then you will be treated as a resident if you fulfill 182-day condition, or there's a new condition 120 days plus 365 days. There is a concept of deemed resident also. If you are a citizen of India, understand, in deemed resident, there is no POIO concept. It is applicable only if you are a citizen of India, but reside generally outside India and comes to visit India or not. In deemed resident, visit is not compulsory. But if you are a citizen of India, you reside outside India and you are having 15 lakh, more than 15 lakh Indian resource income on which no tax has been paid anywhere outside India. So if you are a citizen and earning income from India more than 15 lakh, and on that income you did not pay any tax anywhere in this world, then you will be called a deemed resident. And if you are a deemed resident, you automatically will be resident and not ordinary resident. Clear? And if you become a resident, if you does not fulfill section 6.1 or 6.1a, you will be a non-resident, and one is resident but not ordinary resident. How we will do it? So if you are less than 730 days in 7 preceding previous year, then you will be a resident but not ordinary resident. Or you are 9 times non-resident or more than that out of 10 preceding previous year. Out of 10 preceding previous year, if you are non-resident in India for 9 or more than that year, you will be treated as resident but not ordinary resident. Deemed resident will always be a resident and not ordinary resident. And the fourth case is again very special case. This special case is for point number 3rd, special case person who was a citizen or person of Indian origin, comes to India on visit and having income more than 15 lakh from Indian resources. So if he fulfill that condition and become resident, then to become a resident or not ordinary resident, he need to fulfill either condition A, B or C. A is a new condition. So if he is in India for more than equal to 120 days, but less than 182, then will be a resident and not ordinary, or less than 730 days or 9 out of 10 years non-resident. So this was a quick revision for your provisions with the help of a diagram. If you want, I will upload this diagram for your help. Now moving on to our question. Question number 4. So whenever you solve the question regarding a residency status, you have to check it out. It's a normal case or it's a special case on which certain conditions are fulfilled. So Mr. Square, an Indian citizen, currently reside in Dubai. So he is an Indian citizen. First of all, the main condition is he is an Indian citizen. So a special condition can be imposed upon him. He came to India during the financial year 22-23 was 135 days. He is not liable to pay any tax in Dubai. Following is his detail of stay in India in the preceding previous year. Day-wise details has been given. And they're asking what shall be his residency status for previous year 22-23 if his total income other than foreign resources is 10 lakhs. So first of all, we should check either a special provision is applicable or not. The correct answer is yes, because he's an Indian citizen and comes to visit India. But because income is less than 15 lakhs, so special provision number 2 will be applicable. Provision number 2 was saying if you are an Indian citizen or a person of Indian origin who comes to visit India in previous year, then only condition 1 will be checked. That is 182 days or more. So he is in India for current financial year for only 135 days. Remember that 120-day condition will not be applicable because his income is less than 15 lakh rupees. So only condition number 2 applicable, special provision condition number 2, which says that special condition number 2 says that if you are an individual who is citizen or person of Indian origin comes to visit India, then he will be treated as a resident if he satisfies first condition, that is 182 days or more in India. And because he is not satisfying this condition, so he will be treated as a non-resident. I hope it's clear. So now he is a non-resident, and now the question further asks you that if he is a non-resident, then you have to calculate his income. In case of non-resident, only two incomes are taxable, which is arise or received in India or deemed to arise or received in India, and which is earned in India or deemed to earn in India. So if your income is arise or earn in India or deemed to arise or earn in India, that is going to be taxable. Or the income is received or deemed to be received in India, that is going to be taxable. So in this case, interest on UK development bond is 1/4 being received in India, that is 4 lakh. So because 1/4 of 4 lakh has been received in India, so that portion is going to be taxable. That is, we can see 1/4, that is 1 lakh rupees is received in India. That is going to be taxable, and capital gain on sale of building located in India. Because building located in India, that means the income earned will be treated as income arises out of it. So that is 6 lakh is going to be taxable again. So his taxable income will be 7 lakh rupees. So correct answer for this is non-resident, and this is now 7 lakh rupees. I hope it's clear. Let me see if there is any query. Darshan C is asking, sir, what if here Mrs. Preeti is married? So in the co-partnery case, if the daughter is married and becomes a part of another family, still for the purpose of daughter, there is special provision, and which say they will continue to be the co-partner. So even if daughter is married, she will be treated as co-partner of the property. Okay. So if you need the diagram, I will upload it. Don't worry. Okay, I have answered you, Mr. Darshan, that if she is married, then also will be the co-partner for entire life. Daughter have double membership. In husband family, they will be treated as member, and the father family, they will continue to be co-partner even after the marriage. Okay. Deemed resident, clear. Okay. Okay, everything is clear. Correct. So now we are moving on to our question number 6. Mr. Rajesh. Okay, this is a very interesting question. So I'll take it in a separate sheet. Okay. So question, it's saying, without this, first of all, we should read that question, and then I'll move on to the separate sheet to make you understand what is the exact provision. Right? So question number 6 says, Mr. Rajesh, age 53 years. I already told you, whenever you see a residential status question, always remember, always, you have to check that is it any special case applicable or not. That is very important. Okay. So moving on to question number 6, it says Mr. Rajesh, age 53 years. And his wife, Mr. Soumya, age 50 years, are citizens of country X. So they are not citizen of India, first of all. Okay. Because a special provision is applicable only when you are a citizen of India or person of Indian origin. So in our question, they are not citizen of India yet, any one of them. They are living in country X since birth. Well done. They are not liable to tax in country X. Okay. Both of them have keen interest in Indian culture. Well done. Mr. Rajesh, parents and grandparents was born in country X. So Mr. Rajesh technically is not person of Indian origin also. So Mr. Rajesh technically not person of Indian origin, not citizen. It is clear. So he has no special character. It will be covered under normal provision. But Mrs. Soumya visited India along with Mr. Rajesh for 4 months every year to be with her parents. 4 months every year. So that means more than 120 days. Okay. But parents who were born in Delhi and have always lived in Delhi. So technically we can say in this question, Soumya is person of Indian origin. Detailed information of birth has not been given, but we can understand that if the parents always lives in Delhi, then might be grandparents also in India. So she can be treated as a person of Indian origin. They organized cultural program in Delhi NCR. Income of Mr. Rajesh and Mrs. Soumya from the Indian source for the previous year 20 to 23 is 18 lakh and 16 lakh respectively. So technically, if you see, then Mr. Rajesh is a normal person. He does not fall in any special case. So first of all, we will solve the provision for Mr. Rajesh. So Mr. Rajesh, to become a resident or not, we have to check this, that Mr. Rajesh is an individual who does not have any special provision falling. So he has to be treated as a resident if he fulfill any of these conditions. More than 182 days in India in previous year, or second condition, which says more than equal to 60 days in India, plus more than equal to 365 days in 4 preceding previous year. Okay, we all know the provision. So now we will check, then we will find that he comes to India for 120 days, almost 4 months. So that can we say more than 120 days slightly. Okay, so he is not fulfilling condition this, but he is fulfilling condition this. More than 60 days because he comes for 4 months every year. So that means more than 120 days in this year, and for many years he is doing so. So from last 4 years, if we will take, then almost 480 days he was in India. So because he fulfilled both of the second basic condition, so Mr. Rajesh will be treated as a resident in India. Clear? And because he fulfilled resident condition, then we have to check whether he is fulfilling additional condition or not. Additional conditions say if he is in India for less than 730 days in 7 preceding previous year. Because he is coming for almost 120 days. Okay, I was suffering from viral from last 7, 6 or 8 days. So a little bit cough is there, so it's okay. So less than 730 days in 7 preceding previous year. So if he comes to visit India for almost 120 days every year, then this condition does not fulfill. And we need 10 out of 9 years non-resident. And in every year, he will fulfill the second basic condition. If you'll check in the last preceding year, of course, he will be again in India for 120 and 480. So he cannot be non-resident also out of 10 preceding previous year for 9 years or more. So he is not fulfilling any additional condition. So he will be treated as resident and ordinary resident. The status of Mr. Rajesh will be resident and ordinary resident. But now in case of his wife, that was Soumya. Because Mrs. Soumya is a person of Indian origin. She is not a citizen, but because his parents lives in India since birth, so we can assume in a person of Indian origin, we know that if the birth of Mrs. Soumya or his parents or his any of grandparents is undivided India, then she will be treated as a person of Indian origin. So with the help of information, we can see that she might be a person of Indian origin because the information says so. So because she fulfill person of Indian origin, so now she fall in the third special case basic condition, which says if you are an individual plus citizen oblique person of Indian origin, which she is, and comes to India for visit and having income from Indian sources more than 15 lakh rupees. Then you will be a resident if you fulfill more than 182 days condition, or second condition is more than equal to 120 days in previous year plus more than equal to 365 days. And she is fulfilling the second basic condition. Because she is in India for 4 months, that is of course more than 120 days. So she fulfills condition number second, that says 120 days plus more than equal to 365 days. So she will be called a resident as per the special provision. Clear? And after that, now because she became resident, and that is due to the third special category. Now for the additional condition, to find out whether she is a resident ordinary or not ordinary, we need to check if she is less than 730 days in India. No. The again same condition, 10 out of 9 year non-resident. No. But The third special condition for the special category number third case was if she is in India for more than equal to 120 days but less than 182 days, then she will be treated as resident and not ordinary resident. And technically, she is fulfilling this condition. You can go through the residential provisions and you can find it out that this is a very interesting question. So Mr. Rajesh, because he was not citizen, not POIU. So this third condition cannot be checked on him. So he will be a resident and ordinary resident. But because she is a person of Indian origin, so third condition is fulfilled by Mrs. Soumya. And because of this, she will be treated as resident and not ordinary resident. It's an interesting question. You can go through once again. So you will understand what is exactly provision we are discussing. So now the answer is, the correct answer is D, which says Mrs. Soumya is a resident, but not ordinary resident. You can move on to our normal provision sheet. So the correct answer is D, which says Soumya will be a resident, but not ordinary resident in India, and Rajesh is a resident and ordinary resident in India. Clear? Okay. Next question says we need to find out that out of the following cases, who is non-resident? So Mr. Bob, an Italian dancer, comes on visit to India to explore Indian dance on 15 September 22 and left India on 25th 12 22 for past 4 years. He visited India for dance competition and stayed in India for 120 days. So far, again, Mr. Bob is not a citizen, not a person of Indian origin. Both conditions will be checked. So he comes to India on 15 September and went out of in previous year for 25 December. So I have calculated the number of days. He was in India for 102 days. 102 days he was in India. If you calculate, we need to include 15 September and 25 December both. So he was in India for September 16 days, then October, then November, and then December. So that will come around 102 days. So he is not fulfilling first basic condition, which is more than equal to 182 days. Clear? But he will satisfy second condition because he is in India for 60 days in current year, 102 days. And from last 4 years, 120 days into 480 days. So he will be called a resident. So he cannot be a non-resident. So he will technically become a resident. And resident, but not ordinary resident. If you will find out the additional condition, so he is in India for less than 730 days in India. Because he only came India for last 4 years. So for last 7 years, he is in India only for 480 days. So he will be a resident and not ordinary resident. Mr. Smart. Mr. Samrat. Okay, Samrat born and settled in USA. So Mr. Samrat born and settled in USA. Visit India each year. Again, he is again not yet citizen of India. But if you read the full question, for 100 days to meet his parents and grandparents born in India in 1946. So technically, Mr. Samrat is a person of Indian origin. And if a person of Indian origin comes to India for visit, if a person of Indian origin comes to India for visit, then either he need to fulfill condition number 1, 182 days, or a special condition is 120 days in the year. At least 120 days he must be in India in that previous year and 365 or more in last 4 preceding years. But he comes to visit India for only 100 days. He has income more than 15 lakh, but at least he should be in India for more than 120 days, what he is not. So he is not fulfilling any condition. So technically, Mr. Samrat is a non-resident. Clear? Again, it's a good question. Next, Mr. Joseph. Joseph, an American scientist. He left India to his home country for fixed employment there. He stayed in India for study and research in medicine. Again, Mr. Joseph is not a POIU, not a citizen. Both conditions will be checked. So he was in India from 1st January 2017, 17 till 22, almost 5 years. But we need to find out for previous year 22-23, how many days he was in India. So he left India on July. So technically he was in India from April to 1st of July. And these days I have calculated that is almost 92 days. Before that he was in India. So because he is not a citizen, not a POIO, and left India. So both condition will be checked. He is not fulfilling condition number 1, that is 182 days. But he is fulfilling condition number 2, that is 60 days. And before that, he was always in India. So technically, he is a resident again. So once he became resident, he cannot be a non-resident. So in out of 3 peoples, only Mr. Samrat is technically a non-resident. So the correct answer will be point number B. You can see that the correct answer is this point number B. Now we are moving on to question number 8. Mr. Sushant is a person of Indian origin. Again, person of Indian residing in Canada. During previous year 22-23, he visited India on several occasions and his period of stay in India amounted to 129 days in previous year 22-23. Because he is a person of Indian origin, residing in Canada, comes to visit. His Indian income does not exceeding 15 lakhs. So only first condition need to be checked. That is 182 days, which he is not fulfilling because he is in India non-resident, and for non-resident, only 2 incomes are taxable. Arise or deemed to be arise, or earn or deemed to be earned in India, or received or deemed to be received in India. So the question asks us about his residential status. His status is non-resident. And now the question asks, what income is liable to be taxed in India? So the question says, income received or deemed to be received in India, 250 is going to be taxable. We all know that. And income accruing, arising, or which is deemed to accrue, arise in India, that is going to be taxable. So these 2 incomes are only going to be taxable, which comes to 6,25,000. The correct answer is point number 8. So he is a non-resident and income is 6,25,000. Clear? We will take a break at 8:30. So do not worry, just focus and study hard. So I hope, let's see if there is any query I need to discuss with you. Okay. Okay, Navya is saying clear. Very good. Darshan is saying instant. Very good. Summary of, okay, Darshan, I will upload the summary of, I will upload the notes also for the status and the chart and diagram also. Just relax, okay? Okay, when you qualify to be resident using 120 condition, they're always resident, not ordinary resident. Okay, next moving on to question number 9. 9 is a very simple question. It's a theoretical question and you must have read it. In income exempt from tax, there is a provision which says, that if there is citizen of India who work outside India in another country on behalf of government, then any salary, allowance and perquisite received outside India will be treated as deemed to arise in India. But out of those, only salary is going to be taxable. All allowances and perquisite are exempted if you receive them outside India. And if you are a citizen of India and working for government. So in this question, Mr. Ramesh is citizen of Indian Embassy in Australia. He is getting salary, allowance and perquisite also in Australia. It is paid by, of course, the Indian government. So the question asks, which statement is true? So I told you, only salary is going to be taxable. All allowances and perks are exempted. So out of these 4, which statement comprise what I just told you? The point number C, it says salary received by Mr. Ramesh is taxable in India, but allowances and perquisites are exempt. So the correct answer is point number C. Okay. Moving on to question number 10, which relates to the salary provision. And the salary, there's an allowance that's called house rent allowance. So we are discussing the house rent allowance provision. So anybody over here, can tell me the house rent allowance provision? There are 3 points and the lowest is going to be exempted. So anybody quickly send me the 3 points out of which we need to find out which is the lowest value. Let me see how sincere, how focused, how fast you are. So be a flash and send me the 3 points to calculate the HRA exemption. Let's see. I'm waiting for your answer. Let's see who's going to answer correctly and fast. Hurry up. There are 3 limits. I can help you in first one. The first one was HRA receipt. You now need to write down only 2 limits, the point B and point number C. The first one was HRA receipt. I'm waiting for the 2 other limit to calculate HRA exemption. Okay, somebody has said Kavita is said actually HRA received, rent minus 10% of salary, 50%. Well done, Kavita, well done. High five. Very nice, very nice. The first is, of course, HRA receipt. We can see it over here. To calculate the exemption of HRA, first is HRA receipt. Of course, this is going to be given in question. Second is rent paid, of course. Rent paid minus 10% of salary. And third is 50% oblique 40% of salary. So if you are in a metro city, then 50%. Other than metro city, then it will be 40%. Okay. Anybody can send me what is the meaning of salary for the purpose of house rent allowance? What is the meaning of salary? What we comprise in salary? Okay, Kavita answered. Then Ms. Drishya also answered. Well done. Then Navya also answered. Well done. Then Darshan answered. Rent in excess of 1/10 of salary. Okay, 50% actually received. Diksha also answered. Kriti answered. Correct. So what is the meaning of salary for this purpose? Now I'm waiting for that answer. What content we include to calculate salary for the purpose of house rent allowance? Let me help you. There are 3 basic things. First is basic salary. Now you have to answer 2 more things. Let me see. Okay, so Darshan answered basic DA plus commission as percentage on profit. Darshan, there is some mistakes. Commission as percentage on sale. Okay, not profit. And one mistake also, that is basic plus dearness allowance. That is only for retirement terms. If you are writing it DA, so I can consider as per terms of retirement and non-terms of retirement both. But there is a provision which says no. We will only consider that DA which is as per retirement benefits. Clear? So for the purpose of salary, we will take basic salary, DA which I call T, that is terms of employment for my short provision, and percentage commission on sale. We need to take these 3 things to calculate the salary for the purpose of house rent allowance. Clear? Now let's solve this question. So in this question, the HRA received is given 5,000 per month. So I'll take it like 60,000. First point. Clear? The second say rent paid minus 10% of salary. So rent paid is 5,500. So I'll take like 66,000. Minus 10% of salary. In salary, I will take basic salary 10,000 plus DA is 60% of retirement benefit. That is 3,600. And percentage commission comes to 12,000 rupees in a year. So I can take it like 1,000. 1% of 12 is 12,000. So I bifurcate it to the monthly basis into 12. So this is my basic salary, which will come 17,520. This is 66,000. So I will deduct it from it. It will be 48,480. Third limit will be, of course, because it's in New Delhi, then 50% of salary. That is 1,75,200. 50% of 175,200. But this value will be the minimum value. So that is going to be exempted. So correct answer will be point number A. I hope it's clear. It's very simple. If you have any confusion, If you have joined the class delayed, you can scroll back. It's on YouTube and you can see it again and again, how many times you want, as many as you want. Okay. Okay, so it's really feeling good that you all are attentive to the class and sincere. Definitely, I promise you, if you will be like focus like this, you will be a chartered accountant later or sooner. And I pray that will be sooner, as soon as possible. Okay, so moving on to our question number 11. 11 is saying Mr. Jagat. Again, it's a salary question. It says Mr. Jagat is an employee in the accounts department of some cellular company, and we have to calculate the Perquisite value. So first is he attend a seminar on Perquisite valuation. Seminar fees 12,500 was paid by Bharat Limited. So any payment made by employer for personal purpose of employee, that can be treated as Perquisite. It's a general definition of Perquisite. But any payment made by employer for any official purpose, for any refresher course, for any training session, etc., for employee, it's not going to be treated as Perquisite. So because it's a seminar, and of course it is a seminar for the purpose of official purpose for the company. So 12,500 paid by company is not going to be treated as Perquisite in the hands of Mr. Jagat. Clear? So I'll solve it over here. So first point was that seminar expenses, that is going to be exempted, not going to be treated as your perk. Clear? Now second, tuition fee of Mr. Himanshu, that is son of Jagat, that is 25,000 paid by the employer. So this is a kind of Perquisite I was talking about, the personal expenses paid by employer, and there is no exemption also available for this kind of Perquisite. So this 25,000 is going to be as a taxable Perquisite. Now third point says Ms. Sapna, daughter of Mr. Jagat, studies in DPS public school owned and maintained by Bharat Limited. Tuition fees of 750 rupees per month paid by Jagat, and similar education institution cost is 5250 per month. So in this case, we already know, you must have read in the provision that the similar education cost of the other institute will be taken up as the Perquisite value, 5250. If it is exceeding 1,000, we have to taxable the whole value into 12. There is another view also which says you can take deduction of 1,000 rupees, but we are taking the full value as taxable value. 5250, that comes to 63,000. But 750 is recovered from the employee per month, that is 9,000. So any amount which is recovered from employee cannot be the part of a Perquisite. So that will comes to total value is 88,000 minus 9,000, that is 79,000. So correct answer is option number D. So the seminar expense is exempted, not a taxable Perquisite, not technically exempted. We should say it like non-taxable. Fine. Then 25,000 is taxable, and the school fees that comes to 63,000 is taxable, and 9,000 paid by, of course, the employee, that is going to be deducted. Total taxable value will be, of course, 79,000. I hope it's clear. Okay, well done. So now this question also clear. Moving on to other question. Okay, Mr. Karan. Oh, question number 12, we need to skip. As per the institute told me, it's a reverse calculation in this question, on which the provision will be discussed later. So that question we are going to skip. Question number 12, we need to skip. We will discuss it in our later classes. When I'll come for PGBP, etc., I will discuss it with you. Okay. So we are skipping question number 12. Moving on to question number 13, and it's a very, very simple question. We do not need to use our pen or paper for this. I will ask you about this question. So get ready. XYZ Private Limited provides a car. It's about the car Perquisite. Okay. Below 1.6 liter cc. Very well done. Along with a driver to Mr. Sanjay. So driver was also provided to Mr. Sanjay, employee of XYZ Limited. Very well done. Partly for official and partly for personal purpose. So it's used for both purposes. And the expenses incurred by the company are running in maintenance expenses 32,000. and driver salary is 36,000. You need to tell the taxable value of car facility. So in the car facility perquisite, there are very complicated provision. A lot of permutation combinations are there technically. Like there are cases where car is owned by employee or car is owned by employer. Then we need to find out who is paying the expenditure for the maintenance of car. Then we need to find out whether it's used for official or personal or both purpose. So whenever you need to solve this question, first of all, find these things clearly in your mind. Who owns the car? In this question, employer owns the car. So car is owned by employer. Second thing you need to check, who is paying the expenses? Expenses is also paid by the employer. Clear? So car is employer, expenses paid by employer. Third thing you need to check, it is used for official or personal or both. So in this question, it used for both purpose. So now car is owned by employer. I'm making it simple for you. Okay. Expenses paid by employer. Car is used for both purpose. And driver is also provided. And the capacity is less than 1.6 liter or 1600 cc capacity. So now you need to tell me what amount of perk we need to taxable. There's a fixed percentage in this case. So in this case, this is the last case technically. In my notes, the last case when car is owned by employer, expenses paid by employer, used for both purpose, and driver also provided. So this is the last case in which a fixed percentage defined by the government to tax this perquisite. So let's see who is going to answer me. The fixed value. No. Mr. Ishan Bish, do not send me the answer. I want the two different value. So I'll find out that you know the provision or you are just checking out the question's answer or keys. So send me the exact fixed value, how much for driver and how much for car. Then we will see what is the correct answer. So let's see who is going to answer me correct and fast. I'm waiting for your correct answers. So you need to send me the fixed values for this condition. Okay, somebody. Okay. Miss Drisya. Okay. 1800 per month and driver 900 rupees. Well done. Miss Diksha Agarwal. Well done. High five from Wi-Fi to both of you. The correct answer is, of course, 32,400 because in case of this, car value will take 1800 rupees per month and for driver, we will take 900 rupees per month. So total is 2700 per month into 12. That will be 32,400. Clear? I hope it's clear. So we have discussed the MCQ. 13 question was connected for your till now covered topics like basic residential status and income exempt from tax and salary provision. So we have discussed the provision related to these topics. I am not going anywhere. The class is not over yet. We need to discuss the case scenario topic also. So do not think that you need to sign out and need to go. No, stay with me. Stay with me. Just stay with me. We will solve all your problems. Okay, each and every. So this assignment has been completed, which is regarding the MCQ problem. Now we will move on to our case scenario. And this is a very new concept introduced by our institute for the purpose of learning the things in a very different way. And these are also, of course, very important for the purpose of your examination. So be with me. We are going to discuss about the case scenario provision one by one. We will discuss each and everything. These are our case scenario provision. We will discuss it one by one. Let me take out the notes so it will be easy for me. In the case scenario, there will be a case, and after that, there is some question which is connected to the case which is stated or given above. So we need to understand the question correctly, and then we will find the correct answer in this scenario. So there is question number 1. Okay, so we are done with our problem of MCQ. Now we are moving on to our case scenario. The case scenario, first is Mr. Shashikant, age 45 years, in an Indian citizen and a member of the crew of a Singapore-bound Indian ship, engaged in carriage of passenger in international traffic departing from Chennai port on 29th May 2022. So now there is a special provision for a crew member of an Indian ship. We have discussed in the residential provision that if an Indian citizen, which is a crew member of an Indian ship, and if it goes outside India, again, in that case, of course, the condition one will be applicable to find out whether he is a resident or a non-resident. But there is one more condition. In normal case, the day of departure and the day of arrival into India is technically treated as stay in India. Clear? But in the case of crew member of an Indian ship, technically the provisions are opposite. It says the date entered into the continuous discharge certificate in respect of journey or voyage. The day entered into the continuous discharge certificate will be treated as outside India. In normal case, the day of departure, arrival considered as stay in India, but in this case, its provisions are opposite. The date entered into the continuous discharge will be not treated as in India. Not treated as in India, that means it will be treated as outside India. And the same, the date entered into the continuous discharge certificate, that date also will not form part of that person as stay in India. So the date entered into the continuous discharge and the date entered into the continuous discharge, both days will be treated as outside India. Outside India. Always remember, in case of normal, day of departure, arrival is in India. In case of Indian ship crew member, the day of entered for continuous discharge and the date entered for continuous discharge certificate signing off, both will be treated as outside India. Clear? Now we are going to solve this question. We have to find out the question they are asking, one by one question. First of all, they are asking what is the residential status of Mr. Shashikant. So first of all, we have to find the residential status as per the normal provision. He stayed in India in the last 4 previous year. The information has been given to the question. In current year, he was in India like this. So we will solve it in the opposite manner. So for previous year, 22-23, because it is a special case, he is an employee of an Indian ship who is outside India. So in that case, only first condition of 182 days will be applicable. So if he is in India for 182 days or more in the previous year, he will be a resident in India. Otherwise, he will be a non-resident in India. So to find out, we will take provision like this. Total days is 365. And what we need to do this, we need to deduct the days he is outside India. So remaining will be considered as days in India. In normal case, we add the days they are stay in India. But in case of Indian ship, this method is easy. You need to take the full year days and then you need to deduct previous year 22-23. So you need to deduct the days. Those are considered as outside India. So we will take him outside India from 29th May 2022 till 19 December 2022. So these days he will be considered as outside India, including 29th of May and including 19th of December. So technically we can write it down like this: 3 days of May, 29, 30 and 31. Then June 30, July 31, August, September, October 31, then May, June, July, August, September, October, November and December till 9th. So for these days, he will be considered as outside India. We are calculating 30, 31, 31, and again 30, then 31, then 30 and 19. Total days comes to 205. I hope there's some mistake. Let me see. 1, 2, 3, 4, 5, 6. It's May, June, July, August, September, October, November, and December. So almost 205 days he was outside India. So if out of 365 days, he was outside India for 205 days, that means he was in India for only 160 days. So he was in India for only 160 days. And he needs to be in India for at least 182 days to fulfill the condition of becoming a resident. So because he is not satisfying condition number 1, condition 2 will not be applicable because it's a special case. So he will be called a non-resident. I hope it's clear. So always do what? In case of Indian ship crew member case, take the full year days, 365, or if it's a leap year, take 366 days, and then deduct the days which is connected to date of entered into the continuous discharge joining date and signing of date. These 2 days you need to exclude. So balance will be treated as days stay in India. Okay. So due to this provision, now he will be considered a non-resident. The correct answer for this will be now, we can see he will be as a non-resident. Option C is the correct answer. Now they are asking, what is total income? Because he's a non-resident, so only 2 incomes can be taxable. Agriculture income, point number 1 is dividend declared in the month of April 22 by X100 Singapore company and received is also in Singapore. So 1 lakh cannot be treated as your income for the purpose of non-resident because not arise in India, not received in India. Agriculture income from land in Pakistan but received in India. It's an agriculture income in Pakistan. It cannot be treated as an agriculture income in India. It will be a normal income and going to be taxable. So this 250 is going to be taxable first. Then rent received from property in Chennai. This is going to be taxable again, but because you have not been read the provision of income from house property. So under income from house property, there is a provision that whatever rent you will receive, only 70% will be taxable under income from house property. For the time being, I am telling you, when the faculty is going to teach you the provision regarding income from house property, they will tell you that whatever rent received generally, 70% is going to be taxable after deduction of a 30% standard deduction. So in this case, the 360 will be considered as 2,52,000. So 2 incomes are going to be taxable, 250 and 252. So the answer for the total income will be 5,02,000 rupees. You can see. The correct answer will be 5,02,000, in which 2,52,000 was 250 was agriculture income from Pakistan. And out of that 360, only 70% will be taken as your taxable income of house property. That is 2,52,000. So the correct answer will be 5,02,000. Okay. Do not worry about the 70% provision I have just told you, because when the faculty will teach you the income from house property provision, you will come to know what is the 70% scenario. Clear? Point number 1.3 is regarding the clubbing provision also. And I guess the clubbing provision have not been discussed with you. So there will be some problem if we are discussing it over here. So point number 1.3, because the house has been transferred to his minor married daughter and his wife. So there is a clubbing provision in which we need to understand when any person transfer his property to any minor or his wife without consideration, then there is a clubbing concept arise. So because this topic has not been covered yet, so we are not taking this point question. Point number 3, 1.3, we are going to skip. Mr. Shashikant would like to minimize his tax liability, consulted you to compute the amount of same for the previous year 22 minus dash 23. Again, there is a concept of how to reduce your tax liability, and there is a concept of section 115 BBH, that is a new rates scenario. I hope that has also not been discussed with you, but let me help you in that. Income was 5,02,000. We need to calculate the tax upon it. I am giving you just for time being. The rate is, you have heard, is 2.5 lakh. Tax is nil. The next 2.5 lakh, that is more than 2.5 lakh up to 5 lakh. So the next 2.5 lakh is going to be taxable at the rate of 5%. So there's a new concept of section 115, which says any income which fall between 5 to 7.5 lakh, that is going to be taxable with 10%. If we will calculate the tax on this as per the normal provision, then up to 5 lakh, there will be no tax due to rebate. But because income exceeding 5 lakh, then tax will be 12,500. And that 2,000 is going to be taxable at the rate of 20% as per old regime provision. So that tax will come. That will be 12,900. And then you put 4% cess. That is 516. So if we will calculate as tax liability as per the old regime provision, then the tax liability will be 13416. But as per new regime, there is a new regime. I'm just giving you a hint, in which up to 5 lakh the tax will be 12,500. Same. But balance 2,000 is going to be taxable at 10% rate, not 20%. There is a different slab structure. You will read it later. So that will be 200, 12,700. Then 4% cess will be 508. And that is 13208. And if we round into multiple of 10 rupees, that will be, the correct answer will be B, 13210. That's as per the new regime. Because if you calculate tax, that will come 13416. And you will be confused. So the correct answer is 13210. That is according to the new regime. That will be discussed with you later. So even if you are confused right now regarding how I calculate 13210, you can skip it right now. There's no issue. Fine. So moving on to further questions. I hope things are going good between us. So be focused. If there's any confusion, you can ask me. I will answer it. Do not worry. And I'll come again when the PGBP, capital gain and income from other source sessions. Okay, everything is going good. Well done. So Diksha Agarwal saying clear, sir. Well done. That's why we are here to help you in every way we can. So now question number 2 is regarding the section 10AA, which is for special economic zone provision. A special economic provision has some specific exemption and deduction, which is section 10AA discussed about it. And you need to solve, whenever you need to solve this question, you have to see the establishment year always. And because in this question it says that the establishment year is 2016. So section 10AA deduction is like this. For first 5 years, it is 100% of profit into export turnover upon total turnover. And after 5 years, it's 50%. So because we are solving the previous year 22-23 case, but the unit was started in 2016. So technically, this year is after 5 years. So the exemption value will be not 100%. Generally, students do this mistake. Then they directly give the exemption of 100%. But because this is started in 16 and this is 22-23, so almost 6-7 years has been passed. So we are into 50% deduction provision. And the formula say 50% of what amount? 50% of PGBP. That means profit of the business. We can say PGP is a short form of profit and gain of business and profession. So for your help, let it be net profit into export turnover upon total turnover. So if we are able to find out the export turnover and total turnover, then it's very easy to solve section 10AA deduction. We have given the profit in question 20 lakh rupees. So I have this value 20 lakh into. Now we need to find the export turnover. Export means the amount we have received out of our export sale, excluding any insurance and freight. Out of these 45 lakh, 5 lakh is for insurance and freight. That will be excluded. So my export turnover will be 40. And upon total turnover, again, which is 85 lakh, again, insurance credit included, we need to exclude it. That is 80. So if we will solve it, we will get 10 lakh rupees reduction, but because it's not 100%, it is 50%. So reduction will be only 5 lakh under section 10 double it. It's very simple. It's as simple as that. There is nothing. It's very, very, very simple. The reduction will be 5 lakh. If the economic zone has been started in 2022-23, then reduction percentage will be 100%. But because 5 years has been elapsed and we are after 5 years time duration scenario, then reduction will be 50%. So that will be 5 lakh rupees. I hope it's clear. Let's go on to the, okay. Kavita is asking, our faculty did not taught. I have told you this provision is not into your syllabus yet. So I'm just giving you the example that there is a new regime provision according to which the answer has been framed. You need to check, calculate the tax as per the old provision. The old regime you have already been discussed with you. If there will be new provision which will be come under the calculation of tax and total income calculation, that will be discussed with you. So do not worry about it. Just relax. Fine. Okay. You can ask me query in Hindi also. If somebody will ask me a query in Hindi, I will answer in Hindi. Do not worry. You can ask me in English. All other queries will be answered in English. So if you need to ask something in Hindi, you can send me the query in Hindi. I'll give you an answer in Hindi. Okay. So in somebody, Ishan is asking, is new tax regime slab for senior and super citizen have been removed or is still there? We are just discussing about the old regime right now. Only old regime provision we are going to discuss right now. If there is a new regime applicability, that will be discussed by the faculty when they will teach you the topic. Okay. So just stay, whatever we are studying right now, just be with me for that. Okay. Okay, Miss Krishna is saying, sir, अब जो हमें एग्जाम में करना है, अभी कौन सा स्लैब रेट के हिसाब से करना है? रिसेंट वाला कृष्णा अभी पुराने वाले से ही करना है, जो फैकल्टी ने आपको फर्स्ट वाले चैप्टर में पढ़ाए हैं टैक्स रेट, अभी उन्हीं को यूटिलाइज कीजिए. जब आगे वाले टॉपिक्स आपको पढ़ाए जाएंगे, उनमें अगर न्यू टैक्स रिजिम होगा और आपके एग्जाम के लिए एप्लीकेबल होगा, तो जो आगे वाली फैकल्टी है वो आपको बता देंगी कि आपको न्यू से करना है. अभी आप सिर्फ ओल्ड पर ही फोकस कीजिए. ओके. मुझे वो शायद न्यू रिजिम वाला डिस्कस नहीं करना चाहिए था. आई एम सो सॉरी. ओके, जस्ट फॉरगेट अबाउट इट. फॉरगेट, जस्ट स्किप इट. ओके. मूविंग ऑन टू आवर एक्सपोर्ट टर्नओवर. ये वाला क्लियर है? Is it clear? Section 10AA provision, how we find out the exemption? Section 5 lakh rupees. Okay. Next, the question says, look, आगे ये वाला देखिए. Compute the amount of deduction available for section 10AA to Mr. Suraj for assessment year 23-24. Okay, 2.1 question was asking about the export turnover and total turnover. The correct answer is B. Export turnover is 40 lakh and total turnover is 80 lakh. We have discussed it. 2.2 was asking what are the deduction value. That is also discussed. That is 5 lakh. Now it says, assume that operation has been started in 2018. So now the 5-year concept will be applicable. And due to that, the deduction will be now 10 lakh rupees, because now it will be 100% of the profit into export turnover upon total turnover. Point number 2.4, we cannot calculate because there is some deductions included in this. They are asking for total income of Mr. Suraj. And there is some interest of saving account and post office, and there is some deduction provision. Again, deduction provision will be discussed later by the faculty. Then we will be able to understand point number 2.4. So we are skipping point number 2.4 for that reason. Okay. Moving on to question number 3, that's saying Mr. Kishan. Is a very, very interesting question of agricultural income. Mr. Kishan, after this question, question number 3, I will take a break. So we will complete question number 3, then I'll take a break and I'll come back after a break. Then we will discuss the other question. Question number 3. Mr. Kishan is engaged in the following activities on agricultural land situated in India. Total area of land is 5. It's a very, very interesting question. It relates to integration of agriculture income with non-agricultural income. We have discussed in the first question today that there is some specific percentage. For some businesses, those are agricultural as well as including non-agricultural activity. We can say that is a composite business. So we discussed that question also for composite business. We are discussing this question actually for composite business. That was regarding the rubber provision. And the percentage was 65 and 35%. There is some business, the percentage is 60 and 40, 40, etc. And for coffee beans, it's 75% and 25%. But if there is any other business, we have percentage only for three business technically. That is 35%, 65% for rubber. Then we have for coffee beans, 75 and 25%. And then for roasted coffee and tea, 60-40. But if there is any other business in which both activities are going together, growing and manufacturing, that is composite business, any other composite business, then we have to solve it like a profit and loss account or trading and profit and loss account for agriculture activities separately and for non-agriculture activities separately, because we do not have any percentage, so we cannot bifurcate the combined profit of both activities with the help of percentage. We can do that only in those cases when we have percentage, that three activities. But if we have any other business activities other than rubber, coffee beans, roasted coffee and tea, then we have to calculate, we have to prepare a separate provision, separate P&L or trading account for agriculture activity operation and non-agriculture. How we are going to do that? Let's see. The activity A is first. Question says, he grows sapling or seeding in a nursery spreading over on 1 acre land, the sale proceed of which is 5 lakh. Cost of plantation is 1,40,000. Basic operations are not performed for growing sapling or seeding. In case of nursery business, the basic operation, whether irrelevant, whether you are carried on for sapling, seeding or not, it does not matter. The profit will be treated as your agricultural income. So it's a very simple question. Activity is very simple. It's connected to the nursery operation provision, what you must have been read, of course, with the faculty. And it says sale proceed is 5 lakh and cost is 1,40,000. So what is the income? That is 3,60,000. That is your agricultural income. Income from nursery operations are agriculture income and exempt from tax. The answer is very simple. Point number 3.1. It says what amount of income arising from activity A would constitute agriculture income? The answer is 3,60,000. It's as simple as that. 5 lakh is the sale proceed. 140 is your cost. The profit is 3,60,000. The interesting questions, question number activity B is very, very interesting. And C also, but B is very interesting. Now B says, he grows cotton on 3 acre land. 40% of cotton produced is sold for 4 lakh rupees. The cost of cultivation of which is 2,25,000. So we have given the full information. Now this is a business which we do not have any percentage for cotton business. So we have to separately solve all these provisions like this. Okay. So this 40% part, we can make a small trading or profit and loss account to solve these provisions. It's very, very simple. So he grows 3 acres land, cotton on 3 acres land. 40% of cotton produced is sold for. So sale price, we can write it down over here in a trading account, kind of 4 lakh. And the cultivation cost, that is cost of cultivation, is 2,25,000. There is no other information for this 40% part. So the balance will be my net profit, and that is my agricultural income. That is 1,75,000. Because it's pure agricultural activity, there is no non-agriculture activity included in this 40% part. So activity B, 40% cotton produced, net profit comes to 1,75,000. Point number 312 was asking that. We can see it. What amount of income from activity B with respect of sale to cotton would constitute agricultural income? So the correct answer is point number A, 1,75,000 as agricultural income. So we have solved 40% portion from activity B. Now remaining is 60%. That is interesting. Now the 60% part need to be solved. And we have to prepare two trading and profit and loss account, because now there is a growing activity also and manufacturing activity also involved. In 40% part, there was only agricultural activity, so it's very easy to solve. But for 60%, there is two parts involved, cotton, and that is converted into yarn. So converting into a yarn is a manufacturing activity. So that 60% will be solved separately. First of all, we need to write it down. The 60%, which is growing activity, that is agricultural part. Growing, manufacturing. Okay, this is the agricultural part. So it says, the cost of cultivation of balance 60% cotton is 3,37,500. So the cost of cultivation, we will write over here 3,37,500. I guess I need to make it on a separate sheet, so that will be really easy for me also. Just wait. We will solve it over here. Fine. I will tell you the question and you can understand from over here. So it says the 60% part, we need to solve it in two separate profit and loss account. The 60% part, agricultural, and this is non-agricultural. This is manufacturing, this is growing. And it says the 60% part having the cost of cultivation is 3,37,500. And the market value, which we will take as a sale consideration, is 6 lakh rupees. There is no other information regarding the agricultural activity. So in that case, net profit will come 2,62,500. That is my agricultural income from this 60% part of activity. That is going to be exempted. Okay. Now moving on to the second part, it says the market value of this is used for manufacturing of yarn. So this will be my purchase. Whatever is the market value for the purpose of agriculture activity will automatically become the purchase or cost for non-agricultural activity, which is used for manufacturing, and manufacturing expenses given in question is 1 lakh again. And sale value of yarn, that is 8,50,000. So now the net profit is 1,50,000. And that is going to be taxable because that is a non-agricultural income. So the 60% part have two parts. One is used for growing of cotton. For that, we took the FMV as your sale value, because technically we are not selling the cotton, we are manufacturing yarn, and the finished product yarn is going to be sold. So the provision says that if you do not have percentage composite business like rubber, tea or coffee, then whatever is the market value of the agricultural produce will be taken as your cost for the non-agricultural business. So when you solve the agriculture activity part, you need to take the market value over here and expenses. So that income will be our agriculture income. Whatever be the FMV over here will automatically become the purchase value when you will find out the non-agricultural income. That is 6 lakh. Other expenses already given in question for manufacturing 1 lakh, and sale value of yarn is this. Whatever this profit, this is going to be taxable as a non-agricultural activity. Back to the provision. So activity B, the question is for this: what amount of income from activity B with respect to sale of yarn constitute agricultural or business income? So we can see in the activity B case, the correct answer is B. 2,62,500 is agricultural income, and 1,50,000 is your non-agricultural income, which is going to be taxable. So that was activity B. Now moving on to activity C. That is very interesting, but very simple also. Okay, okay. Activity C is saying land measuring 1 acre is let out to Mr. Ramesh on a monthly rental of 15,000 per month, which is used by Mr. Ramesh as follows. So we have given our land on rent to Mr. Ramesh for using that. 50% is using for the purpose of agricultural, 50% is for non-agricultural, and that is a land. Okay, that's not a building, that is a land. So out of that 15,000, 50%, that is 7,500 used for agriculture income, that is 90,000 is going to be exempted. And this 50% is not for agricultural purpose, 7,500, that is 90,000 is going to be taxable. As simple as that. Okay? It's a land rental value that is going to be taxable as income from other source. Okay, so this is also solved. 3.3. The correct answer is point number D. Once. Yes, fine. Next, 3.5, compute the gross total income of Mr. Kishan for the assuming that he has no other source of income. So we have seen in our all activity A. Activity A was nursery business, fully exempted. B, 40% fully exempted. In case of B activity, there is non-agricultural income of 1,50,000. That is from yarn activity. So that is 1,50,000, which is from yarn activity. That is going to be taxable. And out of this rental income, 90,000 also going to be taxable, which is not agricultural income. So 2,40,000 is the correct answer. That is point number A. So question is asking out of the all above activity, what is going to be your taxable income? So only two incomes are taxable. One is from yarn activity and one is from land 50% value, which is not used for agricultural purpose. That is going to be taxable 90,000 as your not agriculture activity. So total income for Mr. So-and-so Kisan will be 2,40,000. That question number 3 we have discussed. We have left with question number 4, which is regarding salary. It's a huge question. And then we will move on to question number 5. That is also again salary. 2 more questions left. 5 and 6, I guess question number 6. Only one point is there regarding residential topic that we will also going to take. So now we are moving on to our break. Discuss the remaining questions are there. So go have your coffee, tea, water, whatever you want. And we will see you after 10 minutes. So Mr. Manish, can we go for a break? Okay, welcome back, students. So I hope you all must have your tea, coffee, etc., etc. I've also had my tea. So back to our provision, and there was a question we just discussed regarding the old regime or new regime concept. This one, Mr. Shashikant, question number 1.4. This one. So there was a tax provision, what we already discussed regarding this, and there's a new regime which have certain tax benefit, rate benefit. Let me discuss you what are the new regime. And if in question it says that you need to calculate tax liability to minimize its tax liability, then you have to calculate tax as per the both provision. Old regime as well as new regime, 115 BAC, we need to apply that is also. So that is the new provision. If in question is specifically written that you do not apply 115 BAC, then you can skip and calculate tax as per the old regime provision. But if question is silent, then you have to calculate tax as per the both provision. Like in our case, the income was 5,02,000, and if we'll calculate it as per old regime, and in that case, I have told you that tax will be 12,500 up to rupees 5 lakh. Then balance 2,000 will be taxable at the rate of 20%. That will come 400, 12,900, and then we will apply 4% cess, which will come 516. We have discussed this, of course. And total value will be 13416. This is my tax liability as per old regime. As per new regime, there is some concessional rate. The concessional rate has been given like this. It says up to 2.5 lakh, tax will be nil, no tax rate applicable. From 2.5 lakh up to 5 lakh, tax rate will be 5%. From 5 to 7.5 lakh of income, tax rate is 10%. Exceeding 7.5 lakh up to 10 lakh, tax rate is 15%. More than 10 lakh up to 12.5 lakh, the tax rate will be 20%. More than 12.5 lakh up to 15 lakh, the tax rate will be 25%. And more than 15 lakh, the tax rate will be 30%. These are section 115 BAC. So because in our question, it has been written that you have to calculate tax to minimize its tax liability. So we need to calculate tax as per old regime, and now we will apply tax rate as per section 115 BAC. And in that case, up to 5 lakh, tax rate will be 12,500 same, but exceeding 5 lakh upon 2,000, now tax rate will be 10% applicable only, not 20%. So that will be 200. And now my tax will be 12,700. And we apply cess, which is 508. Total tax will be 13208. And if we will round it out in the 10 rupees multiple, that will be 32,13210. That was question. Fine. So that was the old and new regime concept. We just discussed it. We have covered our question number. Now we are moving on to question number 4. Okay. Yes. We discussed till question number 3. Now we are moving on to question number 4. Let's see if there's any query, then we can discuss about it. Just a second. So Bhumika is asking, sir, can you please share some tips for good exam preparation? I will discuss the tip, of course, but when we have normal lectures regarding PGBP, capital gain, etc., in those lectures, we can interact about a lot of more things other than this. So we have a sort of time because we have a lot to discuss the problem session. So Bhumika, I will discuss tips for examination, tips to create interest in your study, about the CA profession, etc., etc. We will discuss about it. Don't worry, fine. So moving on to question number 4. It is a salary question. And it says Mr. Rajesh Sharma, age 54 years, an Indian citizen, is working as assistant manager in ABC Limited. He is getting basic salary of 58,000 per month. And he used to travel frequently out of India for his office work. He left India from Delhi airport on 5th October 2022 and returned to India on 2nd April 2023. First of all, we need to find out his residential status. So if we will take his stay in India, that will be, he left India on 5th of October. So from April till 5th of October, we will consider him as stay in India. So total days will be 188 days. And because he is in India for 188 days from 1st April till 5th of October. So he will be a resident in India as per the question. Generally, information has not been given regarding the old stay in India. How many times he was in India before that. So in that case, the correct answer about the status is resident, but cannot determine resident and ordinary resident or resident but not ordinary resident from the given information. We can say, yes, he is a resident, but whether he is an ordinary resident or not ordinary resident, we cannot find it out because preceding year's information has not been given in question. So the correct answer is A as per the provision, as per the information given to us, of course. Now moving on to other part, the question number 2 says, what are his taxable perquisites for assessment year 23-24? So we need to find out the taxable perquisite out of this information, what we have. So we can see the basic salary is 58,000. That is not my taxable perquisite. Dearness allowance is not my taxable perquisite. Bonus is not my taxable perquisite. Medical allowance is a monetary payment. That is again not my taxable perquisite because those monetary payments that cannot be my perquisite. Perquisite means that is non-monetary. And we start from point number D. So we can see that he was also reimbursed the medical bill of his mother amounting to rupees 15,000. So this is a taxable perquisite. I will take it as a taxable perquisite. Then he was also transferred a laptop by a company for rupees 15,000 on 31st December 2022. The laptop has been purchased by a company on 1st October 2019 for rupees 1 lakh. Company was charging depreciation 31.666%, etc., etc. That is irrelevant. So if any asset is transferred and if it is a laptop is transferred by an employer to employee, then we have to charge depreciation at the rate of 15% for each complete year of used by the company. So company purchased in 1st October and transferred on 31st December 2022. That means company used it for 3 years completely. So we have to charge depreciation at the fixed rate of 50% on this value. So laptop is 1 lakh. 50% for year 1, that is 50,000. The remaining WDV is 50,000. Second year again 50% WDV, that is 25,000. Then balance is 25,000. And the third year again 50%, 12,500. So technically the value of laptop as per income tax is 12,500, which has been given to employee for 15,000. So there is no perquisite because the value was 12,500 only and employee paid it for 15,000. There is no benefit to employee. Suppose if employee paid 10,000 instead of 15,000, then 2,500 can be treated as a perquisite. But in this case, there is no perquisite because he has paid 15,000 rupees for the thing which is available for 12,500 rupees technically. So that is not going to be treated as a perquisite. Now he has been provided with the servant, that is a perquisite, that is 48,000. That is my perquisite value. Then in professional tax paid by employer, 2,400, that is also my perquisite. Is an obligation of employee met by employer. And this equity shares, 350 rupees market value equity share has been provided to employee at 250 rupees. So the difference is your perquisite. 100 rupees is the benefit which is availed by employee So the total value of this perquisite is 40,000. If we calculate that, my total perquisite will be 1,05,400. That is the taxable value of my perquisite out of this question. We can see the correct answer is question number 2. What is taxable perquisite? That is C is the correct answer, 1,05,400. Clear? Now, question asks, what is the income chargeable under the head salary in the hands of Mr. Rajesh? So, moving on to that, we have already calculated the perquisite value, that is 1,05,400. So, now I will take only the monetary payments and I will add this perquisite value into that. So, we will have our salary solution, the total value of our salary. Clear? So, let's solve this. One by one, I will take the value over here. Okay, so the salary was 58,000. So basic salary, I can write it down, 58,000 into 12, that will 6,96,000. I hope it's clear. It's very simple. Then the dearness allowance, that is 10% of salary. That is as per terms of employment, of course. That is, I wrote it like terms of employment. So I always remember that it is terms of employment. So if I need to consider dearness allowance for house rent allowance, rent-free house, I know that how much portion is as per terms of employment. Now we moving on to bonus. Bonus is 98,000. Then medical allowance is fully taxable again, 60,000. Then my perquisite value, which we just calculated, the all perquisite value is 1,05,400. Then this is my gross salary. Need to deduct standard deduction, 50,000. And professional tax paid by employer, which is including as perquisite in above calculation, but it will be deducted as a deduction again. So that will be 976600. So that is my salary correct answer. 97, that is option number A. So basic salary we took dearness allowance, we took bonus, medical allowance is full taxable, perquisite value we already calculated. Total will be gross salary, two deduction will be there. One is standard deduction, 50,000 and 2,400. So that will be my salary correct answer, 976600. If you have any query, you can tell me, okay, this Bhumika gave me the correct answer, 1,05,400, perk value, very good. Okay, so this is the salary question solution. Moving on to the next question. So it was asking status redemption. We just find out that is point number A. Taxable value of perquisite, that is point number C. The point number A is the correct answer for the salary value. Now again, we are moving on to calculate the total tax liability of Mr. Rajesh Sharma. So technically, we have one more income. If you've seen the question, there is one more income which is given in question, point number I, that is short-term capital gain on sale of shares of listed company, on which STT, that is security transaction tax, has paid amounting to rupees 94,000. So what is short-term cap gain? What is long-term capital gain? We will discuss it when we will going through the chapter of capital gain. In that, you will understand what is the meaning of short-term capital gain, etc. For the time being, I can tell you, if there is any short-term capital gain on which STT has been paid, so it is a separate tax rate. It's a separate tax rate, that is 15%. 15%. So it is not going to be taxable as per the slab rate. It is going to be taxable with its special rate, and that is 15%. So we will take 15% of this value to calculate the tax liability and other thing also. So we need to find out the total tax liability of Mr. Rajesh Sharma. So we have salary income. If you'll see, we have a salary income 9,76,600. As per slab rate, if you calculate tax, that will come 107,820. And as I told you that there is a short-term capital gain of 94,000, and it's a special rate which is taxable at 15%. We will discuss these special rate of category, etc., capital gain provision, capital gain chapter. For time being, we can take directly 15% as your tax rate, which is 14,100. So that will be 121,920. And 4% cess, of course, we all know that about it. 4,876. So my total tax will be 126,796. And if we will round it off in a 10 rupees multiple, 126,800. So that is my correct answer is option number A. So we just calculate tax on salary 9,76,600 as per the slab rate. We already know how to calculate tax as per slab rate. And then short-term capital gain has a fixed special rate of taxability, that is 15%. Then we apply cess on it. So that is my tax liability for point number 4.4. So that was question number 4.4. Now 4.5, and now I'm going to ask a question to all of you. Assume for the purpose of this question only, this is a separate question, that Mr. Rajesh was found owner of 5 lakh worth jewelry acquired in financial year 22-23, of which he could not provide any satisfactory explanation about source of income. What would be the tax liability without considering surcharge and health and education cess, if any, of Mr. Rajesh? So this provision you must have read in chapter number 1, whereas black money cases were there. So can anyone tell me what is the tax rate is going to be applied in case of black money? So you have to tell me the tax rate that is going to be applicable in case of unexplained investment, unexplained jewelry, money, etc. So what is the tax rate we need to apply in that case? You need to tell me the tax rate. I am waiting. Who's going to answer me first about the tax rate? Let's see. Anybody? Fast. Fast. What is the tax rate that is going to be applicable in case of black money cases? And if anyone can be the tax rate and if surcharge rate also, then is also very good. And cess rate or combined rate including tax, surcharge and cess, that will be really going to be great. So I'm waiting for your answer. You need to tell me the tax rate, surcharge rate, and cess rate or even combined rate. Then it will be really, really good. And I can understand that, yes, you are all focused during the class. I'm still waiting. Students, fast. We have to move on to question number 5. So I'm just waiting. Somebody need to tell me the rate which is applicable in case of unexplained investment, jewelry, etc. cases. I believe you all have read it, of course. You need to just give some stress on your brain. You have to just recall that. And I personally believe you will find out the rate applicable for this case. Nobody yet sent me the rate. Okay. So the rate is 60%. 60% we charge in case of unexplained investment, etc. So in that case, if 5 lakh is given, then the 60% rate will be applicable and the tax liability will be C, that is 3 lakh rupees. The surcharge also 15%, that is 25% of the rate, and the cess also. So the combined rate is 78%, including cess and surcharge. But in this question, it says that only calculate tax with the normal rate. So we just apply 60% of 5 lakh. The correct answer is 3 lakh rupees. Okay. Moving on to question number 5. Mr. Hardik is appointed as Senior Executive Officer in Sky India Limited, Mumbai on 1st February 2022 in the scale of 35,000, 3,500 and 65,000. He is paid dearness allowance, 40% of basic pay, forming part of retirement benefit. He is given rent-free accommodation, unfurnished accommodation on 1st May 2022, which he occupied only from 1st October 2022. So we will calculate this perquisite value from October till March, from the day he occupied, October, November, December, January, February, March. That means 6 months value. The company pays lease rent of rupees 5,000 per month. Okay. He has been provided a car of above 1.6 liter capacity, which is used by him only for private purpose. The actual cost of the car is 8 lakh rupees. The monthly expenditure of car is 5,000, which is fully made by employer. Car is owned by his employer. So this is the information. Again, we have some information regarding the deduction part. He pays lump sum premium of 1,20,000 toward health insurance for self and his wife for 48 months on 1st October 2022. By account paid check, he also contributed 150 towards PPF. So this is for deduction purpose, which we have not discussed yet. So whatever question regarding this deduction part, we will skip it. Okay. Mr. Hardik is interested to opt for concessional tax regime available to section 115 BAC. He needs to calculate tax as per section 115 BAC. Based on the fact of the case scenario given above, choose the most appropriate answer to the following question. First one, we need to calculate the rent-free accommodation chargeable to tax in the hands of Mr. Hardik. So we have to find out the rent-free accommodation taxable value perquisite, because in this case, it has been given that the lease rent is paid by employer. That means house is on rent. So if house is on rent, then in that situation, we need to find out rent paid by employer. We need to find the taxable value of perquisite. So for that, we need to find these two values, or rent paid by employer, or we will take the percentage value, that is 10% of salary, whichever is lower is the taxable value for the requisite perquisite. So we will take in this question rent paid or 10% value. So from October onward, he will be provided that rent-free accommodation, and the rent was paid by company was 5,000. So for 6 months, rent paid value is 30,000. Now we need to find the 10% of salary for 6 months. And salary means the monetary payments. The monetary payment only will be included. That will consider basic salary, DA if as per terms of employment, bonus, etc. But only allowances in case of allowances. Only dearness allowance, which as per terms of employment, will be included. No other allowance will be included for the purpose of salary for rent-free house purpose. So we need to find the 10% of salary. We need to find out all the monetary payment, including the allowances also. But dearness allowance also only that part include, which is for retirement benefit. All other allowances taxable portion is also going to be included for the purpose of this salary. So it is quite complicated in this question. We will find it out how we need to find these provisions. Okay, one by one. First of all, because in this question, it has been given that he has been working on a scale of salary. And the scale is this. Let me solve it for you in a separate sheet. That will be easy for all of us. So he was working in a scale of 35,000 dash 3,500 dash 65,000. And the scale value has been given on 1st February 2022. So what this scale denote? This scale says that his salary will be from this date is 35,000 per month, and exactly after 1 year, that means from this date, it will increase by 3,500 rupees per month. So that means from 1st February 2023, it will be 38,500 per month. And after every year, exactly from the same date, it will increase accordingly. That means from 1st February 2024, it will again increase by 3,500 rupees. So now it will be 42,000. So now 38,500 plus 3,500 again. So now from this date, it will be 42,000 per month. It will increase 3,500 every year until it comes to 65,000. So once the salary will come 65,000, it will remain 65,000 rupees per month for future. Otherwise, from every year and not from the 1st of April, from exactly the date given in question, like 1st February 2022. So after 1st February 2023, it will be 38,500. And after that, it will be 42,000. But for our question, we belong to previous year 22-23. I need to find my salary during this duration. So from 1st April 2022, I need to find out what is my basic salary from these 12 months. From 1st April 22 till 31st January 23. Because it was 35,000 from 1st February and change in February. So that means during the April 22 till January, it will be 35,000 for 10 months for my financial year. And from 1st February 2023 till 31st March 23, it will be 38,500 for 2 months. So that will be my basic salary. And if I'll calculate it, it will be 4,27,000. For the purpose of rent-free house, we were discussing about the rent-free house provision. For the purpose of rent-free house, I need to take salary from October till March. That is for 6 months. 10% of salary out of this part. So from October till January, that is for 4 months, 35,000 into 4 and 38,500 into 2. So that will be my salary for the purpose of rent-free house. It will come 2,17,000. The monetary salary will come 2,17,000. Now we have DA also given in question, which is 40% of basic salary. So 40% of 2,17,000, that is 86,800. 86,800. I'll write it over here. This is my salary. 40% DA as per terms of employment. So I need to consider it for the purpose of rent-free house value. That will come 86,800. Total will be 3,03,500. There was no other allowances. So this is my monetary salary for the purpose of rent-free house. And I need to take 10% of it. The rent paid, that was 30,000 per Python per month. Now 6 months salary, 10% will be 30,350. Whichever is lower is my taxable value per gazette, that is 30,000. So the rent-free house taxable value will be 30,000 as per this calculation. Because my 10% of salary is 30350, lower will be your taxable value. So moving on to our provision. If the question asks what is the taxable value rent-free perquisite, that will, the correct answer is D, that is 30,000 rupees. Clear? Just a second. We have the calculation. 303. Just a second. Let me see if any other query. 15% of salary we need to take for the rent-free house. Just a second. Just give me a second. In case of population, it's 7.5%, then 10%, and then that is in case of rent-free house. If property is on rent, then we need to take rent paid by employer and valuation of perquisite 15% of salary. Sorry, I just confused with 10%. That will be 15% of salary. Moving on to the provision. We need to take the 15% of salary. So the calculation will be the same. There is no difference. So for the purpose of rent-free house, because the property is on lease, so we will take rent paid by employer, that is 30,000. Or second is 15% of salary, that is fixed. As per the population, if property is not on lease or rent, then it's 7.5%, 10% or 15%. But if property is on lease, then in all cases it will be 15%. There is no requirement of population. 15% of salary as we calculated, which was coming now 45525 approximate, and that is 30,000 is the lower value. That is my taxable purpose. Clear? Now moving on to second question of this. What amount of health insurance? Okay, Bhumika is asking. The fourth question was related to undisclosed income. Yes, section 69A, but so nothing about rate of tax or cess is there in study material. That is a special tax rate and it will be 60%. You need to find out in the study material, or else I will communicate to you when I will take the PGBP provision. I will tell you where exactly it is written in your study material. But the rate is 60%. Okay. Next 5.2, and now it says health insurance premium. That is a part of our deduction process. So we will not take it over here. We will skip the point number 5.2. Now the car perquisite came. Again, I will handle it upon you. You need to find out the taxability. Now, in this question, if you will see, the car is owned by employer. It is used only for private purpose of the employee. And all the expenditure also paid by employer, and the car value also given in question. So you need to tell me what amount will be taxable in case of car perquisite in this question. You need to find it out, the value separately. Do not give me the answer by seeing the solution. You just need to tell me the separate values according to which the correct answer we could frame it. So I'm waiting. Find the value of perquisite of car. Remember, car is owned by employer in this case. Expenses is paid by employer in this case, and car is used for only private purpose. So in this case, you need to find it out what should be taxable and how. So I'm waiting for your response. Let me see how many of you can send the response for this perquisite. Okay, one answer has came 1,14,400. No, this should not like this. I need to the solution pattern. I need to find it out. What value should be used for the purpose of taxability of this? Okay, so we have the for section 69A, Chapter 1 for undisclosed income, section 69 or so, and for 115 BAC. Students, please go through the chapter 1 for undisclosed income under section 69A to find out the solution of that undisclosed income question. So anybody? Look, the car is owned by the employer, expenses is paid by employer, and it's used wholly for private purpose. So in that scenario, what we are going to find, what we are going to taxable, to find the perquisite value of car. It's very simple. You have to take the 10% of the cost of the car and the actual expenditure paid by employer. We need to taxable expenditure as well as the value of the car, like this. The car value has been given in question, I guess 8 lakh rupees. So we will take 10% of this, that is 80,000, and 5,000 per month is paid by employer for the car, that is 60,000. Those both is going to be taxable, and that is 1,40,000 rupees. It's as simple as that. As simple as that. You need to find out the solution like this. It's very simple. So if car is owned by employer, given to the employee, and he's using for private purpose only, and expenses also met by employer, in that scenario, you have to take the 10% of cost of the car and the expenditure paid by employer. So both will be aggregate, and that will be your taxable value for the perquisite. Clear? Next, section 5.4 question. Again, this is a deduction is involved in this question, so we need to skip it. And now we are moving on to question number 6. Again, it is for residential purpose. So we need to check it out. And whenever I've told you again and again the one thing, whenever you are going to solve a residential question, you need to see that is the special provision applicable or not. This is the first thing you need to check it out in every residential question if it is related to an individual. So question says, Ananya Gupta, a citizen of India. The other part of this question related to house property provision. So we are just talking about the residential status find out provision, because other part is income from house property, what we yet not discussed. Okay. So Ananya Gupta, citizen of India, lives with her family in New York since year 2000. She visited India on 21st March 2022 to 20th September 2022. In the last 4 years, she has been visiting India for 100 days, every year to be with her mother. She owns an apartment at New York, which is used as her residence. The expected rent of the house is $32,000 per annum, etc. This is for house property cases. Possession of his house in March, etc. Then the valuation part, then the other things. So technically, the other part related to income from house property, we need to find out the residential status of Ananya Gupta. Fine. So because she's a citizen of India, and if a citizen of India comes to India for visit, so we all know only first basic condition is applicable. Only first basic condition, that is 182 days or more. In this scenario, if we'll find out for how many days she was in India. So she visited India from 21st March to 28th September. So for our financial year, which is 22-23, we need to find out from 1st April 22 till 31st March 23, how many days she was in India. So she came on 21st March 22 till 20th September. So we will take days from April only. So April, May, June, July, August till 28th of September, of course. If we will see how many days she was in India, 8, 9, 10, 11, April, May, just a second. 21st, she visited India from 28th September. April, May, June, July, August, and this is September 28th. a second. She will be a resident only when she fulfill condition number 1. She visited India from 21st March 22 to 28th September 22. So for our financial year, she was in April in India. The last 4 years, she was visiting in India for 100 days every year to be with her mother. She owns an apartment in New York, which is used as a residence. The expected rent of house is 32,000. The value of one, okay, 21st. April हमारे पास है April, May, June, July, August and September. So we 30, 31, 30, 31, 31 plus in 28. 181 days. She is in India for, it will aggregate this. This is 181 days in India. So total is 181 days till 28th September. And we need at least 182 days or more. So that's why she is a non-resident for assessment year 23-24. So we can see the correct answer is non-resident. All other question of this topic is technically connected to income from house property. So we need to skip that. So we have covered the case scenarios. Till the topics you have already studied via the classes, till salary provision, we have discussed all the topics like that. And now the new classes of income from house property, PGBP, capital gain, etc. will be shared with you in the same time. So you have to study very hard. If there's any confusion, you can ask me query. I'll answer you. So she is a non-resident. Okay, Diksha says 181 days. Correct. Diksha also said that on page number study 1.43, unexplained money provision investment is given. So you can go through that. If you have any confusion regarding the unexplained money question, you can go through and read it from the study material also. So if you have any other query, I am waiting for 2 minutes. If you need to ask any query, I will answer you, or then we will meet in our PGBP session, capital gain session. We will have a lot of talks regarding our study or the topic and other things also. So please do one thing, be focused, be disciplined, and just enjoy your studies. Don't take your study as a burden. If you take your study like a burden, it will be really difficult for you to complete this journey because it's huge. You have to clear your intermediate, then their final is waiting for you, then you will be a chartered accountant. So just be focused, enjoy this journey because this journey will not come back. Like Zindagi na milegi dobara, that's why I'm saying enjoy this journey because this time is very precious. And one more thing, this course is not difficult. I promise you, if you'll focus, if you will create interest in your study, you will find it out that this course is not difficult at all. You just need to create your interest in this. And I'll tell you how to create your interest in this also. I'll give you some examination tips also. Remember one thing, before your examination, do not leave any chapter. Some students do what? They just not going for comprehensive study, they're going for selected study. That is very dangerous. Cover every chapter, every topic. Do not leave anything. So if you cover each and every topic, that will really help you in your examination. Clear? So I think there is no more queries from this part. So just take care. Today class is going to be end. And if there's any query, so I'll be again coming to you for a PGP cap gain. You can ask me any query over there. I will upload the chart for residential status. You can download it from the portal and do good. Keep safe and see you very soon. Manish ji.